Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within company filings. And let me tell you, PagerDuty has a little something up its sleeve that's worth unraveling. We're diving into a brand new report from PagerDuty that just dropped, and while they've got some financial news to share, there's also a significant move on the company's stock buyback program that deserves our attention. And it happened right at the end of August 2025. So first up, let's set the scene. The most important date from the top of this filing is August 28, 2025. This is the date that the earliest information in this report is being reported on, but it's not necessarily the date of the filing itself, which we'll get to later. We're talking about PagerDuty, the company that helps businesses manage their digital operations and make sure everything runs smoothly, especially when things go wrong. They're a big player in this space. Now, PagerDuty stock, its common stock, is traded on the New York Stock Exchange, a pretty big deal for any company. Okay, so while the earliest event in this report is August 28th, PagerDuty actually reported financial results for the quarter that ended July 31st on September 3rd. This might sound a bit confusing, but it's pretty standard. They announced their quarterly earnings and now they're filing a report with the SEC to include that announcement as part of their official record. This is the really juicy bit. On August 28th, PagerDuty's board of directors decided to boost their stock buyback program. Remember, when companies buy back their own stock, it's like they're saying, hey, we think our stock is a good deal. They're increasing the total amount they can spend on buying back their shares from $150 million. This is a significant increase, a $50 million boost, and it signals a lot of confidence from the management. And here's an interesting detail. As of the end of July, they still had $150 million left under their old buyback plan. This new, larger program essentially adds an additional $50 million to that remaining capacity. So how will they actually buy back this stock? Well, they've got a few options. They can buy it on the open market, which is the most common way, or they can do it through private deals. They can even use special trading plans designed to avoid any appearance of insider trading, which is a good practice. It's important to remember, though, that this isn't a promise to buy a set amount of stock. They can change their minds, they can slow it down, speed it up, or even stop it altogether without telling anyone beforehand. This gives them flexibility, but it also means shareholders shouldn't assume a certain level of buyback activity will definitely happen. And where is this money coming from? They're planning to use their existing cash reserves. This means they're not planning on taking on new debt to fund these buybacks, which is generally a healthier financial approach. This big buyback program is expected to run until March 2027, but again, the board can always change that deadline. This gives them quite a bit of runway to execute the plan. Now, circling back to those financial results mentioned earlier, this filing includes a press release from September 3rd. That details their earnings for the quarter ending July 31st. This is where we typically find the nitty-gritty numbers about their performance, like revenue and profit. Just to reiterate, their stock ticker is PD and it trades on the NYs. This is the information that any investor would need to find and track the company's performance in the market. Now let's think about what this all means. PagerDuty is essentially signaling strong confidence in its own stock. They're willing to put down another $50 million to buy back shares, which suggests they believe the stock is undervalued or that they have excess cash they want to return to shareholders. This is often seen as a positive sign for investors because it can increase earnings per share and make the stock more attractive. However, we need to remember that this is a buyback program and not necessarily a direct indicator of booming sales or massive profit growth. We need to look at those financial results from the press release, which are incorporated here to really understand their operational performance. PagerDuty operates in a competitive space where keeping customers happy and preventing disruptions is key. Their software is critical for many businesses, so there's a solid foundation there, but they need to keep innovating and executing well. The fact that they're funding this from existing cash is a good sign, showing financial discipline. They aren't stretching themselves thin by borrowing heavily to finance this, but it also means this buyback won't directly fuel new growth initiatives if they choose to do that instead. Looking at the bigger picture, PagerDuty is making a strategic move to support its stock price, while also signaling financial health. It's a balancing act, and it will be interesting to see how efficiently they execute this expanded buyback over the next couple of years, especially as market conditions and their own business performance evolve. So to wrap it up, PagerDuty is boosting its stock buyback program, adding $50 million to its plan, all funded by cash and aiming to continue through early 2027. This is a clear vote of confidence from the company's leadership in its own value. Now, I want to hear from you. What do you think about this stock buyback increase? Does it make you more optimistic about PagerDuty's future, or do you think they should be investing that money elsewhere? Let me know your thoughts in the comments below. If you found this breakdown useful, please give it a thumbs up and subscribe for more deep dives into the corporate world. We also have a fantastic Discord community where we discuss these filings and more. You can find the link to that in the description below. Thanks for watching. See you next time.